What's up, investors? It's your favorite investor, and this is the channel to help keep you invested and build your wealth. Now, as you guys can see on the screen, I have ticker symbol TSLY. And so for a lot of y'all that don't understand or don't know what this ticker symbol is, this is a yield max Tesla option income strategy ETF. And so the goal of this is to basically write covered calls on Tesla stock to earn premium, and they pay you out that premium. But if you guys aren't aware of what a covered call is, you basically agree to sell your shares at a certain strike price, and that is the price you choose to sell your shares at expiration. And so if at expiration, the share, you bought it at $130, at expiration it is now $150, and you said you were going to sell them at $145. Well, now you are forced to sell those shares at $145, even though the stock price is at $150. Now, there's good sides and bad sides to this. As you can see, your upside is definitely capped. However, your downside is not. So if you're holding the stock and it ends up going below your price that you bought at, you can still choose to write covered calls. However, you probably won't get as much premium. So this is something to keep in mind, as a lot of people that have this fund right now aren't necessarily aware of how this is not the best option for continued growth. Although this is going to be a stock that pays you out a decent amount, it's not the best stock to grow your capital. So let's just dive in and talk a little bit about the fund TSLY. Current share price of $11.98. It currently has an expense ratio of almost 1%, and they pay out a monthly dividend. I get all of my information on seekingalpha.com, and I think this is a fantastic resource for a lot of you investors. The dividend rate is $9.12, meaning that for every share you have, they pay you out $9.12. That is a dividend yield of almost 76.47% for the trailing 12 months. Now, I don't know about you guys, but this seems just a bit too good to be true. You're basically being paid back in dividend income, and I'm going to show you guys how this hasn't necessarily been beneficial for a lot of investors that are looking for capital appreciation. We're going to go into the charts and compare TSLY to the actual Tesla stock. Just real quick, just to talk about the returns compared to the S&P 500. Over the last year, the price return on TSLY has been negative 17.68%, and the S&P 500 has returned 23.91%. However, the total return over the last year has been 52.08%. So this is something to keep in mind, as it has had a positive return. However, all of those returns have been in the form of dividend payments from the options premium collected. So as you guys can see, I've got the chart pulled up. Pretty much we can see that TSLY really hasn't gone anywhere, and Tesla has been kind of in this range for the most part from 2021 to about right now 2024, the beginning of 2024. So this is a fantastic option if you're looking strictly for income. However, I don't think that most long-term investors that are investing right now, if you're in between the ages of, let's say, 30 to 45, you're probably in your wealth building years. And so income shouldn't necessarily be the ultimate goal at this point, because what I'm about to detail is going to be the extreme amount of capital deterioration that occurs with TSLY in this option premium ETF. So let's jump into the very first time that TSLY was out. Basically was November 2022. We can go to its peak, which was in December of 2022. You guys can see it came onto the market at a price of $21.29. And since then, it's pretty much just been kind of in this range, up and down, but hasn't really moved up in share price. And this is pretty interesting because, as we can see, in December of 2022, Tesla's share price was about $194. And it was actually in the middle of a downtrend. So as expected, if the underlying is moving down, then we should expect the ETF to also move down as well. And that is exactly what we saw right here. We kind of see the ETF is introduced into the market. Tesla has this downslide. And as Tesla's coming down, TSLY is also coming down. However, one of the things of note that we should pay attention to is that as Tesla started to have its uptrend, it got back up to a price of about $214 before meeting some resistance. This was not the case with TSLY. As TSLY began to recover its price, it only got back up to $17.82, as opposed to its share price of $21 $2.73. So this is definitely one of those cases that is proving my point to where TSLY is just not going to be able to keep up with the capital appreciation that Tesla has. Tesla can go up limitless and it can also go down limitless. TSLY can go down as much as it can go all the way down to zero. However, when it starts to move up, it can only move up as far as the strike price that it wrote. As we look at the profile of TSLY, in order for them to pay out as high a dividend as they do, they have to write options premiums at the highest possible point that they can get it. Meaning that when they write those covered calls or they write those cash secured puts, those covered calls that they end up writing have to be either at the money or very close to the money, and that leaves little room for the upside. And so that is why TSLY just simply cannot compete when it comes to capital appreciation. So fast forwarding a little closer to today, we kind of see how Tesla has been in this huge range in between 297 to probably around 197, right? But when we go back and we look at that same range for TSLY, they've been stuck at 1834. And although Tesla did not make a new low, TSLY did make a new low down at $11.16. So definitely something to keep in mind. Like I said, TSLY could be a fantastic fund if you're seeking purely dividend income and a return on your cash. The only problem is that when you go to redeem that cash, to redeem the actual shares, those are going to be worth a lot less. However, you have been paid back in dividends, and that is why when you look at the total returns, TSLY actually ended up outperforming the SPY by about 25%, right? The total return on TSLY was 52% for the year. The S&P 500 total return was 25.97%. So it just kind of all depends on what you're looking at. I wouldn't say this is a horrible investment, but I definitely think that you should know and understand exactly what you're investing in. All dividend stocks are not made the same. And so when you're getting paid out almost $9 on each share and the share price is $11.98, you've got to understand what you're giving up in order for you to get these high dividends. So I personally like a balance of both. So I currently stick with something like JetQ. And if you're curious to see what my analysis is on that, I'll tag that video. It'll be up above. Make sure you guys go check that one out. This is one of my favorite dividend stocks, one of my favorite premium income dividend ETFs. And this has performed fantastic for me. I love the payouts on it, and I continue to dollar cost average into this. As always, make sure you guys check out thebestdividendcalculator.com so you can start putting together your plan to build wealth. We've got things like capital appreciation. You can put in your dividend yield, dividend growth, and see how your money could grow over the next 10, 20, 30, 40, 50 years. We have a lot of different scenarios out there, so make sure you guys go check that out. As always, it's your favorite investor. Don't do anything I wouldn't do, and I'll catch you guys on the next one. Peace.